All right, so we are live today, and as many of you know, the Fed is meeting, and they are looking at inflation reports, and we are getting live feeds from those inflation reports today. We're tracking that information. If you are interested in what the market is going to be doing in, say, 2, 3 months, you're planning for next year. The big question is: are interest rates going to be around 8% next year, or are they going to start trending downward? And as soon as they start to trend downward, we're going to see, I think, prices increase upward some. And so, if you're trying to time that just right, it could be very important with making the most amount of money and also maybe getting into a property before prices start to increase again. We are seeing some downward pressure on the prices so far this year, and we're seeing some folks that are changing their mind, taking their home off the market because they can't get what they were wanting for it, and that's just the situation that we're in. So today the CPI reports came out, and as you would hope not, the uh, interest rates are probably going to stay higher for longer. The CPI report today said that the consumer price index was at 0.4% for the month, and they were thinking it was going to be at 0.3. So it came back a little bit higher than what they were expecting. It is down tremendously. Last year was 3.7. At this time, we're at 0.4%. So there has been tremendous improvement in the CPI, but it was a little higher than what they had projected. So with that, the news is not great. We're not going to see a response from the Fed that would be more lenient and maybe some downward pressure on those interest rates. The fact that it came back a little bit higher than expected means that it's possible that we could see the Fed do another interest rate hike, which obviously is not what we want to see. So the question that we have for the next week, next month, what are the jobs reports? What are they going to indicate? And are we going to see these numbers improve? So one of the things that I see from a real estate perspective is they're looking at at data that is about 60 to 90 days late. So the home prices actually started to increase earlier this year. And over the last 2 to 3 months, we've seen a markedly decreasing downward pressure on price. We're seeing more price reductions than we've seen in years, and we're seeing properties consistently that are motivated dropping price and accepting lower offers. And even in the last 45 days, we've probably seen a 3 to 4% drop in market prices, and that's based on data that's coming out of the MLS. So the question that you have right now is, how is that information going to factor into 1, 2, 3 months down the line when the CPI reports are coming out? Because right now they're showing increases in home prices. That's old data. So the we should see some improvement with the CPI reporting as these home prices have made some of their adjustments. That's one of the things that we're expecting. We got some news last week that wasn't great, just from a real estate perspective. So it's great news in one regard. The jobs report came out, and the job market is holding very strong. So a strong job market means that the Fed is going to persist in holding pretty firm on these interest rates. So when the labor market breaks, we're going to see the interest rates, I believe, start to have some pretty significant downward pressure. Until we see that, we're just not going to have much relief in terms of interest rates. That's been the number that we have been tracking pretty intently for the last 6 months. It's the labor market numbers. A strong labor market indicates that we have a very strong economy and a likelihood of increased wages. With that, you're going to see the Fed's trying to slow that down because they're trying to get control over inflation. So, unfortunately, we're going to need to see the labor market start to soften and potentially break before we see interest rates have a significant response in terms of coming down. So with that, what should we expect with the interest rates? What are we looking at? Well, the 0.4% that came back, it was a little higher, but it is much better than it was last year. So inflation is being tamed. They are getting a better handle on that number. They're shooting for an overall number of 2%. They were up around 3% on the last report that came out, and so the 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 pricing and the inflation, it is coming under control. The only question is how long before it hits into a zone before the Fed really starts to look at possibly reducing rates. Not They met last month and they elected to not increase, but they said that there was a possibility that next month, November, there could be an increase. So, are we going to see it go up, or will we see it come down? There was another article where I was reading yesterday, and the article was about the fact that pricing and inventory has continued to persist, even with higher interest rates. So the higher rates typically will cause inventory growth to speed up. And so you'll have more and more homes on the market not selling as the rates increase. And as that happens, you'll see some downward pressure on prices. Well, what's been happening over the last week has been the higher rates are causing less and less and less people to sell. And that is having a opposite impact. So the inventory is actually, we've seen it begin to slow. That said, last week we saw a significant increase in inventory. So usually we'll have X amount of homes that will sell every week. Those numbers dropped significantly, and we did not see a market um, cancellation in the last week. So we saw that begin to slow down a little bit. So you have inventory starting to build finally, and so that's where the price reductions are coming in. Is inventory building? People are saying, well, interest rates are what they are. We're going to have to sell in the next year anyway. Probably not going to improve before then. So we may as well go ahead and stick to it and do what we need to do. And so they're doing price reductions, and so the inventory is building. Homes are less homes are selling now, and as people are trying to sell, we're seeing inventory begin to build. So that's where we're at. CPI numbers came out today. It was not great news. It's not something that's going to make interest rates come down sooner. It is probably going to be around the summer market before we start to even see that conversation take place, unless the labor market breaks. And we're going to keep following that. Every week, we're going to give an update sort of like this, and just let people know what's going on, and see if there's any new news that might indicate um, that we might have something that's about to turn. All right. Hope you guys enjoyed this. And if you ever have questions, you can ping those in. We'll get these on a schedule where you can see it in a few days in advance. That way you can maybe tune in live and ask some live questions. All right. Great. Thanks.